Today's theme really has been about sustainability, and I think that that's been a fantastic element to this. But we saw yesterday from Martin, who for most of the day has been sitting here hemming, here he is, Martin. Martin, your statistics show that energy investment is tiny. So we've got this whole day on sustainability and energy transition and how important that is, but where's the money? So health is the big block of color on his graph, and IT is the big block, and then 6 or 7 further down is energy. And so we heard from Jim from BlackRock that there is hundreds of billions available, but there aren't the projects. Well, we'll hear about some of the projects. Katja will tell you about one in particular, but we'll hear some of the projects. And this is about the fuels of the future as well. So we'll talk about hydrogen, lots of announcements, but where are the deals and what are you doing in these areas? And those are some of the points. Erin Hancock from BP said that we, collectively, the CVC community, need to be making bigger, braver bets. But my question is, why has it taken so long? Because this isn't the first conference that we've said similar things. And oil companies and others have been CVCs for 30 years. So why is the line on Martin's graph so narrow? And how is that going to accelerate? Next year, I do hope, being the only optimistic lawyer that you'll ever meet, I hope that next year and the year after that, it will be the biggest line. It's certainly a massive amount of the work that we do. Erin also said there are no shortage of founders, but again, does that mean that we're missing the scale-ups? Does that mean that we're missing the larger projects? I'm not talking about offshore wind, etc., as we heard from Lord Grimstone. The UK, for example, has a leading position in that. But that, of course, also required, in the 2 big areas of generation and transportation, there are government, or are there government roles? Obviously, in offshore wind, that required government roles. Denmark for 30 years, a government push, solar in Germany, and so on. All of those examples were given. Erin from BP also said we need to take more risk and have longer investment cycles. So are we getting it wrong? Are we deploying? Are we being too impatient? Are we not deploying too little capital and for too small a project? And so they will introduce themselves when answering questions rather than right at the start. But Ian, Katja, and Luca will cover this ground. Katja, let's start with you. In terms of, we spoke about the projects. Are there any projects around that could be funded? And also, can you touch upon we're talking about fuels as well today. Can you touch upon the fuels and the hydrogen and the other alternative fuels that will be deployed in your technologies and more broadly?
Sure, thanks, Neil. Hi, everyone. So I'm Katja. I'm representing ZeroAvia. So just a quick introduction to ZeroAvia. We're building a hydrogen electric propulsion system for aircraft, initially starting to look at small turboprop aircraft, so 6-seater, then 20-seater, but then over time moving to regional aircraft, both turboprop and jets, and in the longer time frame also intending to move to narrow-body aircraft. So that's a very quick snapshot of what we do. So we are an early-stage company, 4 years old. I think a pretty good example of sort of what it looks like to innovate in our area. In terms of projects and financing, so I actually came to ZeroAvia from the investment side. So I used to work at a company called Systemic and run the kind of in-house VC fund there, and actually invested in ZeroAvia and then moved across. So I think I've had a narrow but nevertheless kind of balanced view of both sides of the equation. And I would say that from my perspective at least, there definitely still is a bit of a mismatch in terms of capital and projects in terms of the stage, the risk, the time frame, some of the things that Neil picked up on. I think the space has evolved quite a lot, as I'm sure all of you know. So, a lot of you have lived through that change, but I think there's still slight misexpectation when you read about these billion, trillion dollar kind of ESG, clean this and that funds being raised. I think there aren't projects and companies that meet that and those investment criteria that are genuinely impact oriented. So I think that this space is still a little bit less mature than some of those fund sizes would suggest. But at the same time, I think from at least our experience, the area where there is a gap is not at that kind of Series A seed stage, but more at that sort of BC stage. In particular, when you're in longer innovation cycles like we are, and it takes you longer to get to revenue, longer to get to proof of concept, and scale up beyond that. I think it's much harder for investors to appropriately assess what risk should look like at that stage, and what to look for in a company or a project that is going through that particular phase, and therefore to be able to provide adequate financing. So we do hope to see sort of more investment vehicles that are able to span that stage in particular, and support companies through. I think in our experience, that is more the value of death now than maybe some of the earlier stages that used to be the case prior to that. So that's just kind of our experience of where the investment gap is and why maybe the new funds that we've read a lot about are not quite addressing that at the moment. In terms of the kind of fuel mix and sort of what role we play within that and how we see that, so we're clearly focused on hydrogen, so we think there's big potential for hydrogen in aviation, but also in other kind of hard to abate heavy-duty applications. In aviation, so we didn't start off as a hydrogen fuel cell company. We started off with the goal of figuring out a way to eliminate emissions from aviation across all segments. We looked at all the different options, quite quickly concluded that battery wouldn't be able to get there. Of course, you have sustainable aviation fuels that absolutely have a role to play, but long term, they're still emissions, they're still byproducts of that process, and long term, it's not the most efficient engine to be using either. So we actually think that hydrogen electric is the best way to decarbonize, but also long term is a more efficient system, assuming that you get sort of course, the value chain fully in place. So we are rooting for hydrogen in our sector, but the more demand there is for it and from other sectors, the faster we will get the cost of green hydrogen to come down, the more widely available it will be, and the more we will benefit from it as well. So I guess we see ourselves as an anchor for the deployment of the infrastructure, because we think aviation can provide concentrated high volumes of demand, but we really want to work with other users of hydrogen to really kind of accelerate the rollout of that infrastructure. So that's, I guess, kind of the perspective that we have on it, but we fully acknowledge that it's a portfolio of solutions. So we're not, when we speak to our customers, we're not saying you have to only go with hydrogen electric from now until forever. We fully acknowledge, first of all, that our technology is not yet available. Second of all, that it will be a while until we can really deliver longer ranges. So we encourage airlines and other aircraft operators to look at a portfolio of options, but just to seriously consider backing hydrogen electric, certainly for that regional segment in the near term, and then long term to allow that technology to scale to larger aircraft.
Fascinating. And Luca, we'll come back to some of those points raised as well. Luca, at Baker Hughes, I mean, obviously you're working on a number of projects. You're also, we heard on a panel earlier today, working on some hydrogen projects. So as well as introducing yourself from Baker Hughes, and more broadly the fuels that you're committing to and working on projects with, but also what are you doing in hydrogen?
Yeah, first of all, as your introduction, as you can see from the table, I have a very cool job title because I'm the Vice President New Frontier. I was telling Kathy, it sells very well to my kids because it's kind of cool. But basically what I'm doing, I'm helping the company to create the capabilities to play in a space that is different to where we play today, because today we are a strongly oil and gas driven company. We will try to move our focus into a more suitable energy mix capability using the technology capability we have. We are a technology provider there. So when you listen to me, besides noticing, I think what shows like a very thick Italian accent, you need to think of the person that is trying to guess what people like Ian or Katya, what are the problems that they are trying to solve, so that I can think where I should put my capability to help. And hydrogen is one of the big things. Actually, yesterday we had a very good presentation from NEOM yesterday. They made a very good point about creating a huge hub of hydrogen production and how to integrate it with local renewable, but also generation capability in other parts of the world. So to your question on the specific of the fuels, I think the mix of the fuel of the future is very difficult to be guessed. But if I need to stick to experience, there are three things that I noticed. Today, we don't have a single fuel that is winning. In today's world, we have fossil fuels, renewable energy, including hydro, we got nuclear power, we got all of those. So it's very likely that there's not going to be one winning fuel for all the application. And that makes my job more complicated, but even more challenging, because then you need to start to think where is the biggest amount of capital to be allocated on the technology. The second is that most of the technology that will fix the issues we have, including the big elephant in the room, the new generation nuclear, including the hydrogen production, are not yet there. The technology they are producing hydrogen today, they are picturing hydrogen as a fuel, they have so many handover from producing the renewable, then producing the hydrogen, then taking it into ammonia to make it a fuel, that the economy is difficult to be there. And the third is that there is a very important point. It's and also some lesson coming from history. There was already a change on the energy mix in Europe, for instance, after World War II, when we switched from coal to natural gas. At that time, a huge pipeline from Russia, from the North Sea, from Algeria were built, and guess what? The states pick up the bill. So the big question today is that who is going to pick up the bill and where they will drive? If it's clear that Europe, the European Union, being in UK, I need to use that now, is taking a direction where green hydrogen will get a lot of support, because it fits some of the strategic objective in terms of technology development and job creation and energy independence for the country. So there will be a lot of political and policies decisions that need to be there to support. Having said that, working on hydrogen, I think there is all kind of opportunities on next generation production tools, which we are looking at as a company, where we will try to apply our capability to try to jump-frog and get the efficiency of the system better. Again, I'm convinced there's not going to be one solution, there will be many.
Yeah, and Ian, obviously at National Grid, you have to deal with issues today, and you have to scan the horizon, which is a big part of your role. So please introduce yourself and tell us about some of the scanning of the horizon on these new fuels.
Yeah, absolutely. So, hi everyone, Ian Cooper. I lead the venture capital activities for National Grid Partners for the UK and Europe. Delighted to be here. So, if I look at the electricity industry, I think we're well on our way to decarbonization of the electricity industry, because in 2020, from memory, we generated some 43% of the electricity for the country from renewable sources, as opposed to somewhere around 37% from fossil fuel sources. So that's certainly on its way. I think the heating, the decarbonization of heating is much less advanced than that. Certainly if I look at the activities that National Grid has underway, they've just stood up a test facility at DNV Cumbria to duplicate the national transmission infrastructure and the distribution in order to actually test varying levels of blending hydrogen into the gas network, starting with a very low blend and going right up to 100%. I think, technically speaking, there's probably going to be some kind of blend wall that occurs where you could maybe blend up to 20%. I'm not an engineer, so I can't give you the exact figures there, but that will be tested, sort of due to end sometime in 2023. And so certainly in terms of alternative fuels, hydrogen, and also renewable natural gas, biomethane, there is an intent to blend that into the network. There's quite a lot of technology that's going to be needed in order to be able to deal with that. So we're looking at various areas where we can support those activities. So for example, while most of the existing equipment will be compatible, there are obvious things that won't be. I mean, a very simple thing like a boiler, for example. We can't use our existing gas boilers to burn a blend. We need new boilers, and likewise we need new metering infrastructure. And then if you look at blending biomethane or renewable natural gas, the pressures from these plants are quite different. And so, I could imagine at some point in the future that we're going to have a much smarter gas network with smart valves that will enable pressure regulation in a more sensible way. And similarly, there are a lot of technologies with regard to electricity in order to integrate renewables into the grid and make them a little bit more efficient. So distributed energy resource management systems. I think there's also a lot of talk about moving, and you'll see this across many countries, moving to a DSO, distributed system operator model, where there's certain regions that will manage the various renewable resources. I think in order to improve the efficiency of renewables as well, there's entire markets that we see developing already. Companies offering software that enables virtual power plants, where we could potentially aggregate renewable resources within a specific geographic region and enable customers to trade renewable energy between them. So there's a lot of activity, sort of not, I wouldn't say the core technology of blending hydrogen into the network or connecting renewables into the grid, but there's a lot of technology that's going to certainly contribute towards making it more efficient, both for the consumer as well as easier and more effective to manage for the utility operators.
Right, absolutely. Well, we'll come back to some of those themes: digitization, the ability to trade in and out of grids, both gas and electric, etc. The rise of the prosumer, being able to do that, which is we'll come back to. But just I'll stay with you, Ian, just for now. Lucas said, who's going to pay for it? So just on heat, who's going to pay for it? The government, there've been a lot on a specific item of heat pumps recently, but heat pumps, we also heard from a heat pump company on one of the breakout sessions as to there's a skills gap. There aren't enough engineers to deploy. The housing stock isn't ready. So heat pumps might not be the answer, or are they the answer? Is one technology the answer, or is Luca right that this needs to be a matrix of technologies?
Yeah, I absolutely agree with Luca that it needs to be a matrix of technologies, and I believe my organization has that belief as well, that the path to decarbonization of heat is a hybrid strategy. I think moving the gas network to using a blend of hydrogen and biomethane that helps to reduce the carbon emissions while we deal with the other issues, such as the unsuitability of the housing stock.
Yeah.
And over time, that will enable a quicker reduction in emissions. But the bottom line is full decarbonization of heat means electrification. And that is going to have an unavoidable impact on bills, while the cost per kilowatt hour of electricity exceeds the cost per kilowatt hour of natural gas. But I think as the mix of renewables becomes more preponderant in the electricity generation, so it's going to become cheaper to move towards a full electrification of heat. If we had to do it today and we attempted to switch everyone over to a fully electrified heating system, I would imagine consumer bills would go up several times over.
Exactly, which goes back to Luca's point about who will pay. And ultimately,
maybe Neil, I can
Luca,
offer a reflection on this, because on the optimistic side. 20 years ago, everybody who was around maybe remember that to kick off a wind farm was impossible without subsidies. Subsidies were there, industry scaled up, technology got better. Now we can do the 2 megawatt wind turbine, and the projects now are commercially viable without subsidies. So the role is not who's going to pick up the bill forever. I think what is the role of the support? The technology needs to scale up. So if you go to the hydrogen production today, to produce hydrogen, you need to spend at least $6-7 per kilo, and it's not going to be competitive if it doesn't go below 2. Right? That's it. So there is a phase where the technology will have to be scaled up so that they can reach the right level of volume and start to scale up in a way that become competitive. And they need to solve all the problem, like where will we find all the water we need? Where are we going to get the emission? Can we disconnect production of hydrogen from oxygen? All problems that are very clear to the academic and the research world, but they need to be scaled up to go to a level of scalability where they become commercially viable. So it's a transition. It's not a build that will be there forever. Technology proved during the history that they can solve the problem, but the initial push is to be there.
So let's come back to transportation. So Katja, a couple of things with you. Obviously, your business. You say you're committed to hydrogen, but it's also other ways of doing that. And obviously, there are other people who think that everything should be electrified, and that's the one solution in transportation, including aviation. And also, you mentioned that you'd had a meeting with Lord Grimstone. You're a 4-year-old company. He's not just seeing the world's biggest companies, he's also interested in seeing you. What is the role of government? And this is global corporate venturing. So what is the role of government and which are getting it right? Are there any right ways of doing it? Is the government the consumer? Is the government driving demand? Is the government the regulator? Obviously with stable regulation, hopefully that's predictable and doesn't change with the changing of the governments. Are they the funder through grants or matched funding and so on? Or all of the above? And which case studies do you see outside the UK as well as inside the UK?
Yeah, sure. So we've been very generously supported by the UK government in particular so far. So I'll give you a few kind of examples of that. But just first, I guess, wanted to say that, linking to the comments earlier, that I agree that it's not someone footing the bill forever, but there clearly is that kind of transition cost when we, for example, are still in R&D phase, we're pre-revenue, and the capital stack at that stage does look different to how it looks when we actually have a commercial product and how it looks later when we're rolling out manufacturing facilities and are really kind of in the volume game. So I think that the capital mix is different each stage, and government has a role to play, in particular in the earlier stages, to support companies like ours. So in our case, and this is for our company, but also I would say more broadly for our sector, the government has a few roles to play. One absolutely is on the funding side. So in our case, we've been getting a number of projects funded through Aerospace Technology Institute, BASE, and Innovate UK that have supported our primary R&D activities in the UK. So before we can even start flight testing, we have to do the core development, and government is quite well placed to provide partial funding for that. And then kind of there will be subsequent forms of government support that will be sort of lower share, but nevertheless will still be there over time. And then I guess, again, when we get into the manufacturing stage, there also tend to be various forms of public-private partnership type funding that can help us reduce the overall cost of capital. The other role for us is government as a policymaker. Of course, I mean, we've been talking about it for a long time, but a carbon price would fundamentally transform sort of how different technologies compare today on a cost basis. I mean, a lot of our customers already have internal carbon prices set anyway, but certainly anything more the government did in that area would help. But beyond that, also various commitments to net zero, in particular when it comes to aviation, are very helpful and drive sort of both the customers, but also the airports and sort of other value chain participants to take action. And then finally, there's another regulatory component that's relevant for us, which is certification. So aviation is a very heavily regulated industry. Certification is a big bottleneck to adoption. And it's kind of the last phase of development and one that we have least control over. At the moment, there isn't a playbook for how to get a hydrogen electric powertrain certified because one has never been certified. So while it's not kind of the government as such, there's definitely supportive activity that government sort of related agencies can take to help us co-develop that in parallel with our R&D, such that when we are ready for certification, the process is a bit more sort of defined, and we can put some more concrete time bounds around that to minimize our own sort of go-to-market risk. So those are the main areas where we welcome government support and have gotten at least some of it already in the UK. Outside the UK, I mean, US, has had a number of challenges over the last few years. Sort of a couple of years ago, not such great shape. Recently, there have been a number of proposals for innovative stimulus packages, so we'll see what ends up getting approved. But the Department of Energy has a number of loan programs and things like that, all of which are designed to kind of reduce this green premium and help companies, enter commercial production as soon as possible.
And Ian, we mentioned, Katja just mentioned the carbon price. You mentioned trading in and out of grids, electric and gas grids, for example, the role of the consumer. What is required for the next enablement, really, of those sorts of markets, and are they necessary, such as the carbon price?
So I think those markets are developing already. I see a constant deal flow of companies that have some type of offering, either sort of within distributed energy resource management systems. So I think this is technology which is here, it's today. There certainly needs to be development of standards, interoperability between the various systems, but that's a natural evolution that occurs in most tech markets. So I think we sort of well underway there. The real challenge is for companies that are in industries that have technologies that are much longer in terms of gestation, such as hydrogen, for example. There's just so much to do there without having a large enough market today to actually make these companies worthwhile as a venture capital risk. I think this is one of the biggest issues. I think, and correct me if I'm wrong, it's actually quite difficult for many companies active in the hydrogen industry today to get suitable funding because they're generally not seen by typical venture capital funds as being particularly investable, right?
Yeah,
so there's certainly
lots of announcements, however.
Sure.
But not necessarily the projects that quite match and suit. Does that mean that the venture capital model has to change? That's more of a rhetorical one. We've got 3 minutes left. You know the famous Bill Gates quote, of which there are loads of famous quotes, but one of them is that everyone overestimates what's going to happen in 2 to 3 years and underestimates what happens in 10. Luca, what's going to happen in 10 years' time in terms of the fuels, the alternative fuels for a sustainable future?
I think that there is so much energy that we're putting on understanding what happened 10 years from now that if we win the inertia of the carbon, like the basic, I think the acceleration will be quicker than everybody expected because technology are out there. Every time you can find ideas on how to produce hydrogen cheaper, how to do carbon storage in a different way, or to use carbon CO2 for different applications. There are a lot of technologies. I think the venturing system has to be a bit different, and the evaluation of those companies are telling you that you need to do something different to make it work. What will happen, in my opinion, there will be another challenge for the technology to be solved, and if the money is there, I think we have all the tools to create a new energy mix.
Yeah, absolutely. Katja, in terms of a similar sort of question, but also how do we get to Martin's graph next year, and the year after that, and the year after that, in 10 years' time? How are we going to have energy, technology, and sustainability and transition? How are we going to have that as the biggest one? Do we have to change the model, or does it come down to this acceleration of adoption of these technologies?
I mean, sorry for a cop-out answer, but I think it is a bit of a mix of the two. So I think one thing that I think the model does need to evolve a little bit. Timeframes are a bit different, and the sort of feedback loops are longer in what we are doing. And I think capital that recognizes that is better suited to support companies like ours. But at the same time, I think more success stories will help for more capital to flow. At the moment, I mean, automotive, you can look at, Tesla and things like that. Yes, there's a few outlier examples, but there are not still so many clean tech 2.0 success stories that have sort of really made it all the way through, have gotten to standalone profitability, and have actually been able to kind of stand on their own 2 feet long term. So I think having more examples of that across the industries will allow investors to sort of more credibly support companies that are trying to do the same. So I think it's kind of understanding this new innovation kind of paradigm and what the timelines are, but through examples rather than through more kind of hypothetical forecasts, which is a lot of what we're basing it on at the moment.
Yeah, we need more Tesla.
Well, we can try, but yeah.
Ian, in the last few moments, a similar sort of forward-looking perspective, but also I haven't asked you about the role of government as well. So in that 10 years and hopefully the accelerating graph in energy technologies and the role of government from your perspective, how important is that, and what do they need to do in the first few years to enable that then to be the graph that we all want to see?
I certainly think that some kind of funding mechanism would probably be a good idea, whether that be in a matched funding style or something other is open to
Equity,
question.
please, not debt. Yeah.
Exactly, sort of equity funding, something where government's actually sharing the risk for some of the things that they're asking everyone else to do. I think also, if I look at anecdotal comments that I've heard from various people active in the venture capital industry, there is sometimes somewhat of a reticence to invest in something where the market's entirely driven by regulatory issues because of the fear that government's just going to change its mind overnight, which we've seen happen, right? And then...
What was the phrase? No more green crap.
Yeah.
That changed the life cycles for some of my clients. They didn't survive.
So I certainly think clearly articulated long-term policies would also go a long way towards supporting the development of innovation within all of these areas. It's a hybrid approach. There's no one size fits all.
Yeah, absolutely. Time is up, sadly, and I'm being beckoned, and so it just remains for me to thank Luca, Katja, and Ian, and thank you very much for listening, and we'll hand you over to the next one. Thanks ever so much.
Thank you.
Thank you.